How the coronavirus impacted the world's biggest tech companies, and Remdesivir strikes back. This is the Seville Reports Weekly Review, where we take a look at the headlines that move the markets during the week and all things investment related. On Monday, the markets continued their move up from the previous Friday. The Dow closed up 358 points, the S&P closed up 41 points, and the Nasdaq closed up 95 points. The easing of restrictions in some places in the US and several other countries helped move the markets on Monday. In Spain, children were allowed outdoors for the first time in 6 weeks. Italy and Belgium made plans to begin easing some restrictions on May 4th, and France is looking into lifting some restrictions on May 11th. Also, the CBOE Volatility Index, the VIX, was down and below 40. The VIX tracks the volatility of the S&P 500. The 7% drop on Monday was a good sign that the markets were moving towards less volatility. In earnings news, NXPI Semiconductors beat EPS estimates by 79 cents, and revenue of $2 billion was in line with analyst estimates. On Tuesday, the markets pulled back after several days of closing up. In Tuesday's session, the Dow closed down 32 points, the S&P closed down 15 points, and the Nasdaq closed down 122 points. While the U.S. moved closer to reopening, the news that the U.S. became the first country to hit 1 million confirmed coronavirus cases weighed on the market. Tuesday was a big day for earnings. Alphabet Google reported an EPS miss by 89 cents, but beat revenue estimates by $990 million. The company reported revenue was strong for the first 2 months of the quarter, but then saw a significant slowdown in March. Ad revenue on YouTube declined by 14%, which is surprising to me based on the number of back-to-back 4-minute infomercials I see on YouTube. But moving on, Ford reported an EPS miss by 17 cents and revenue miss by $90 million. Ford warned they expect Q2 losses before interest and taxes to be more than $5 billion. AMD reported an earnings per share of 18 cents, which was in line with analyst estimates, and revenue of $1.7 billion was also in line with estimates. Revenue increased 40% year over year for AMD. Starbucks earnings per share of 32 cents was in line with estimates, and the company beat revenue estimates by $150 million. Comparable sales in Asia and Europe fell 10%, and comparable sales in the US were down by 3%. Pfizer beat EPS estimates by 9 cents and beat revenue estimates by $650 million. The company reported a favorable impact from COVID-19 of $150 million. Revenue estimates for 2020 remained unchanged at $48.5 to $50.5 billion. Caterpillar missed EPS estimates by 7 cents and missed revenue estimates by $340 million. Revenue fell 21% year over year. The company didn't provide financial outlook for 2020, but advised of $7 billion in enterprise cash and access to $20 billion of liquidity. In another look at how the coronavirus impacted travel, Southwest reported an EPS beat by 12 cents, but missed on revenue by $320 million, which was an 18% year-over-year decline in revenue. To better its cash position, Southwest plans to offer 55 million shares of common stock and $1 billion of convertible senior notes. Pepsi beat EPS estimates by 4 cents and revenue estimates by $680 million. We're drinking soda again. Revenue grew 8% year over year in Q1. Pepsi withdrew their financial guidance for 2020. On Wednesday, the Fed, Gilead, and the market struck back. The Dow closed up 532 points, the S&P 500 closed up 76 points, and the Nasdaq closed up 306 points. The Fed decided to leave interest rates between 0 and 0.25%. The Fed pointed to the sharp decline in U.S. economic activity, weaker demand, and lower oil prices for their reasoning behind maintaining the current interest rate. Q1 numbers were released for the U.S. economy. The country's economy contracted by 4.8%, driven by a drop-off in consumer consumption. But Gilead's update on its COVID-19 drug Remdesivir also helped push the markets up on Wednesday. Gilead reported 50% of patients treated with a 5-day dosage of Remdesivir improved, and more than half were able to be discharged from the hospital within 2 weeks. Wednesday was also a big day for earnings. Let's look at the ones that moved the markets. Tesla reported an EPS beat by $1.45 and a revenue beat by $140 million, another profitable quarter for the automaker. Tesla produced 102,000 vehicles for the quarter and delivered over 88,000. Facebook beat EPS estimates by a penny and revenue estimates by $520 million. The company reported a 10% increase in monthly active users and an 11% increase in daily active users. The stock was up 9% in after-hours trading. Microsoft reported an EPS beat by 13 cents and a revenue beat by $1.3 billion. Microsoft reported a 59% year-over-year revenue increase in its cloud business and a minimal net impact from COVID-19. GE missed EPS estimates by 3 cents, but beat revenue estimates by $180 million. GE stated the coronavirus crisis reduced free cash flow by approximately $1 billion. Boeing reported an EPS miss by 21 cents and revenue of $16 billion was in line with estimates. Revenue was down 26% year over year, and Boeing advised it's looking to cut staff by 10% and focus on liquidity. To add to Boeing's troubles, S&P downgraded the company's debt rating hours after the earnings release. On Thursday, markets gave back some of Wednesday's gains. The Dow closed down 288 points, the S&P closed down 27 points, and the Nasdaq closed down 25 points. Despite ending the month on a bad note, the S&P had its best month since 1987, climbing more than 12% during the month. Another 3.8 million Americans filed for unemployment benefits last week, bringing the number up to 30 million unemployment claims over the last 6 weeks. On Thursday, over 250 companies reported their earnings, but we'll touch on the largest few. Apple reported an EPS beat by 29 cents and revenue beat by $3.6 billion. The company reported a drop in revenue in Greater China due to the coronavirus, but increased its dividend by 6.5%. Amazon reported an EPS miss by $1.10, but beat revenue estimates by $1.4 billion. The company reported it foresees $4 billion of costs related to COVID-19 in Q2. Investors took note and the stock sold off in the after hours. Twitter's Q1 EPS of 11 cents was in line with estimates, and the company beat revenue estimates by $34 million. The company's ad revenue was up 3% year over year, but experienced a 27% decline from March 11th to March 31st due to the pandemic. Gilead Sciences beat EPS estimates by $1.68 and beat revenue estimates by $110 million. Visa beat EPS estimates by 4 cents and also beat revenue estimates by $100 million. Visa saw payment volume increase 5% year over year during the quarter. American Airlines missed EPS estimates by 29 cents and revenue estimates by $490 million. American reported an 18.9% drop in revenue passenger miles in Q1. And McDonald's reported an EPS miss by 9 cents and a revenue beat by $50 million. Comp sales fell by 3.4%, buybacks were suspended, and Mickey D's raised $6.5 billion from issuing new debt. On Friday, markets were rocked by a little bit of everything. The Dow closed down 622 points, the S&P closed down 81 points, and the Nasdaq closed down 284 points. Not a great way to start off a new month. In news that moved the markets, President Trump threatened retaliation on China over the coronavirus pandemic, reigniting hostilities between the US and China. Investors fled Amazon stock on Friday, concerned about the potential $4 billion drag on operating profits due to the coronavirus. There was a late bulletin that the FDA approved emergency use for Remdesivir to treat coronavirus patients. We got earnings from some of the country's largest oil companies, which also played a part in bringing the markets down on Friday. Exxon Mobil reported an EPS beat by 47 cents, but missed on revenue by $2 billion. Revenue decreased by 11.7% year over year. Q1 production rose by 6%, but cash flow from operations fell 25%. Chevron beat EPS estimates by $1.27, but missed on revenue estimates by $750 million. Chevron expects operating costs to decrease by $1 billion and announced plans to reduce 2020 spending by as much as $2 billion. And Phillips 66 beat EPS estimates by 39 cents and missed revenue estimates by $800 million. Revenue decreased 10% year over year for Phillips 66. And then there was Clorox, who reported a revenue beat by $90 million and an EPS beat by 22 cents. Organic sales rose 17% during the quarter as the demand for disinfectant rose due to the pandemic. Overall, the Dow, the S&P 500, and the Nasdaq closed down on the week. In crypto news, this week while traditional markets were struggling, Bitcoin and others were on a run. Bitcoin made a major push in the later parts of the week and was trading at $8,758, an increase of 16.5% from last week. Ethereum closed the week out at $211.55, up 12.2% from last week. Litecoin was trading at $47.11, up 5.4% from last week, and Ripple increased by 10.5% over the week, finishing our week out at 21 cents. Crude oil closed our week out at $19.60 per barrel, up close to 16% from last week's price. A big winner for the week was Audio Codes, AUDC. The stock jumped 35% after the company's earnings per share increased by 38% year over year. A big loser for the week was Chesapeake Energy, CHK, which dropped 62% on news that it was preparing to file for bankruptcy. That's a wrap for this week's market review. If you want to dig deeper into the headlines we covered, the links to the stories are in the description below, and a link to sign up to our weekend article in Focus is also in the description below. Not to brag or anything, but we did put Netflix and Tesla in focus before both stocks experienced major runs recently. And if you're ready to get really serious about investing and creating wealth for yourself, check out our latest quarterly newsletter, the Seville Report. Serious investment ideas presented in a way that experienced and novice investors can understand. And if you're ready to master the markets, then check out our newsletter at SevilleReport.com. Thanks again for checking out the Seville Report's market review. This channel is dedicated to anyone who wants to start investing but doesn't know how or where to start. If you have any questions, ask in the comments section. Like and subscribe, and may your next investment be your best investment. See you next week.